Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, July 13, 2016. My name is Doug McKay. I am the founder and head moderator for Quantum Leap Futures. Each morning we get together and take a look at the market macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking us out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. We do this live in the go-to each day and live trading during the course of the RTH session. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday our main hypothesis was an open auction out of range and move up, find sellers somewhere in the 45 to 48 area, and then rotate down and come down into yesterday's body. Secondary hypothesis was a move down into the value area, which started at 34.75 or down to the 32.30 area, and then rotate up and make new highs. We kind of got a combination of both, but this rally is just ongoing. We had another gap and go day yesterday, and we've just gone and made a new high in the last half hour to 21.50 and a quarter. We still have a measured move right now up to, I think, 55 something. We'll take a look at that in a minute. But this market rally, which is like 160 plus points from the Brexit low at 1999, or even the Friday low, I should say, that was 1980 something. It just keeps going up. We do have some news coming up today. We've got scheduled news. We've got 10 o'clock. We've got Canadian Bank monetary policy rate statement and overnight rate. We've got 10:30 crude inventory, Bank of Canada press conference, and then we've got 30-year bond and beige book with the federal budget balance. So we've got a full calendar today. So just be aware. I mean, right now it's buy the dips until the dips don't work anymore. But this market is starting to get to a point where it's got to have some exhaustion and some type of a pullback, but just doesn't seem to want to go anywhere. I was looking at the Renko this morning, and last time we actually even touched the bottom of the Keltner channel, where we actually had a touch of the line. I know we went lower here down to the 2081, but the actual touch of the lower line was all the way back on 707. Since then, this has just been a rally that just has not had any weakness. We have not even really challenged the lower Keltner line at all. Certainly have not had a close below it. When was the last time we had a close below the lower Keltner line? Sorry, come on. Right here on the 707, it's just basically, but an actual close right here, 706. Just very, very, very strong market, and it's hard. These markets are very tough to trade, because if you don't get in early in the day, they don't seem to have any serious pullback to give you the ability to get in, and you're always got in the back of your mind, is this rotation down going to be the one that leads? I mean, when we rotate, I think we're going to rotate pretty hard, but you got 1, 2, 3 gaps after this gap here. So I mean, we've got 4 gaps right now that, and this was usually the exhaustion gap, and then we get another gap yesterday, and this market's on a mission. Anyway, let's take a step back and just take a look at what we've got. We've got earnings. The big one today will be Yum. I think they're after the market. Yum Brands after the market. But so far, earnings have not been bad. Pretty much decent earnings. I'm going to stop saying a lot. Let's just take a look at the macro. I like to start my day with a basic candlestick chart with a 9 EMA and 20 SMA. I'm looking for slope and separation, where we're violating the trend, challenging the trend, or continuing the trend. Strong trend for the last few years, coming down at the end of 2015 and challenging, in the beginning of 2016 and challenging, but now we're getting continuation, and we're starting to get some slope and separation on the monthly, so the trend is intact right now. On the weekly, just third straight week of upward gains, and we got good slope, good separation. We created a technical gap, but this can still go higher. The trend is up on the weekly. On the daily, same thing, technical gap, good strong slope and separation. A move back to the 9 EMA right now will take us back to 2114.50. Remember, that's right near the 50% of the significant breakout candle. It doesn't look like it here because we rallied in the Globex, but 50% of the RTH candle is 1450. Going to the intraday, you can see 4-hour is trading and tracking and paralleling the 9 quite nicely. We have not even touched the 9 EMA. Good slope, good separation. Trend is intact on the 4-hour. Oops. 1 hour, we came down and challenged the trend, and then we got right back above it, and now we're starting to get slope and separation and possible continuation. We continue to put new highs in. We just put another new high in at 2150.75. Going to the 30-minute, good slope, good separation. Again, trend is intact. 15-minute, same thing. 5-minute. So everything is still looking like we can go even higher, and no letting up as of yet. I was talking about this measured move. We do have a measured move right here. Here's the impulse. Here's the zipper. The measured move, the primary target is 55.75. The extended target is 59.75. It doesn't get violated until we get below the 21.38 and a quarter. The 21.38.50 is going to be our key line in the sand today. But we're coming up, a test of the upper Keltner is going to bring us up into the 21.52 and a quarter, and we just made another new high as I speak. So we're just, we're still trying to see where we're going with this. In terms of the structure, we've broken out. There's nothing up here for us to guide us. We do have the 47 yesterday, which was our VPOC. That's about the only guidance we're going to get. You can see the CLVN at 38 and a quarter. It's the low also of the RTH session yesterday, and then we've got this gap between and then back into Monday's body. But right now we're expanding, and we've got to rely on measured moves to guide us because we've got no structure to give us any guidance right now. Take a look at the overnight session. Of course, you know, our overnight low I can put in. I don't know where our overnight high is going to be yet, but our overnight low is 42. Our VPOC is not likely to change because we're expanding the range right now. Our VPOC is at 45.50. Is this a double top? High 51.50, high 51.50. So I can't really put the Globex high in yet. So I'm just going to go ahead and start setting my day up, and we'll worry about the overnight high based on the overnight low. Now our ATR is running at 32. Just pull it up here. I had to make an adjustment yesterday because I realized that we had that outlier that was affecting the 20-day ATR. So if you take the actual and include the Brexit day where we had a range of 120.5 points, it kind of skews the 20-day ATR to up to 32.11. I've now eliminated and pulled the outlier in, which brings our daily ATR down to 27.50, which is, you know, a more realistic view. I mean, it's not a big difference, but over 4 points, it's something that I thought I should adjust. And again, we're just making a new high right here at 52. So based on the 27.50 adjusted ATR, our daily ATR upside target is 69.50 based on the overnight low. We certainly have range to continue to extend here. We're getting a little bit extended right here, 6.25 point range. I think you could probably even look to take a short here against the upper Keltner line for a small little pullback, maybe get 6 or 8 ticks out of it right now. I can't do it because I'm talking, but we've got 52 as our all-time high and our overnight high. All right, so other information within here, we do have an LVN right here at 46.25. I'm going to set that up as a trade level, and there's another one that they're creating here at 48.75, but we've got the value area high here at 48.50. So I'm actually going to use the 48.50 to 49.25 as my trade level below us. I want to be below 48.50 if I'm entering a trade in this area to get short into the 47 and the test of this 46 area. Our close, our naked close is 46. I'm going to just move this down to encompass that. In fact, I'm going to move it down so the 46 is at the high end, and I really want to watch the VWAP from yesterday at 44.75. So that's all the information I can get out of here so far in terms of the levels. I have to wait to see what we do, what the all-time high is going to be and the overnight high is going to be during the course. To the downside, we've got the 47 as the key target inside a range. 46 naked close, and then below that we've got the midpoint at 43, and then I'm sorry, at 43.75, and then we've got the value area low at 43. So actually I'm going to just do it this way, and then we have the overnight low at 42. And then below that, our key line in the sand is going to be right here at the 38 and a quarter. Below that, look for the gap to get closed here at 36.75. And then all our levels below that remain the same. 34.75 with the VPOC, 33.75, 32.50, 30 and a quarter, 25. There's a target at 28 and a quarter. And then currently, I've got to adjust this, but if we look at the current high at 52 and a quarter minus the 27.50, this gets moved to 24.75. And again, it might have to be moved again. And then below that, we've got 22, 19, 17. The naked single. We have a naked single on the 50% of the significant breakout candle at 14.50, 12, 25, 10, 8, 75, 650 is really going to, I'm going to shift that to 6 and a quarter because that's Brexit. And I'm not worrying about much below that because I don't think we're going to get there today. So, I mean, it looks like we might have put the high in. We, if you took that short, you should be in and funded by now. So our overnight high is also the all-time high at 52 and a quarter. So, what am I looking at? To the upside, there's really nothing to guide us up here. We've got a measured move right now to 55.75. And then the extended target, 59.75. And then I had another measured move to 21.66 and a quarter. Our weekly ATR is running 55.33.75 off of the 21.20 Sunday low. Our upside ATR is up at 21.75.50 based on a weekly 20 period at 55.3375. And got another measured move at 21.88.50, and that's about it until we get into the 2200. I mean, I was reading some stuff about people calling for 2400 and 2500 based on apparently there's a very rare signal that because of the all-time high being more than 300 days, that's only happened a small amount of times going all the way back to the 1920s, and every time the market has rallied another 7 to 12%. So they're using that and calling for a move up into the 24 to 2500 area. Just blows my mind. Hypotheses. Well, I keep getting Hypo 1 and Hypo 2 mixed up because I keep thinking that we're going to have a pullback, but my hypos are based on what market action. Now, we had a very weak high yesterday at that 49 and a quarter. We actually had a little bit of a one-tick failed auction and that double top at 49 that came up and put in a one-tick higher high. And then, we didn't, even on a failed auction, we didn't really auction lower. we went as low as 44, and in the Globex we only went to 42. So I mean, here we are right back, broke the week high, and trading with a gap again. So we're going to get, if we hold for the next 25 minutes above the 49 and a quarter, we're going to get our fourth day of a gap up. My main hypothesis is an open auction out of range, a move up into the 52, put in a new all-time high and fail somewhere up here, and rotate down through, chop around in the 48 to 49 area, and then push through to take out the 47, maybe down into the 45, maybe the 43. But now I'm thinking that once we get down here, we're going to find initiative buyers again. They're going to be a lot of dip buyers, and they're going to rotate us back up and then move up and probably come up and into this 55, 75 area. So hypo 1 is open auction out of range, initial push up, failure, come down, chop around at the range or value area high, push through, take out the naked VPOC and naked close, and then find response or initiative buyers somewhere down here in the 45 to 43 area, and a rotation back up through and making continuation of new highs. That's hypo 1. Hypo 2 is an open auction out of range, a push up, a failure, a move down, and then same thing, come down here, but instead of getting a continued move up, failure down in the 42 area and a move down into this 33 to 34 area and chop around in Monday's range, which was pretty tight. We're starting to see tightening of these RTH sessions, and I expect to come down here and chop around here. So hypo 2 is open auction out of range, move up, move down, chop, and then move down, chop, then get continuation down and a move down to test the 38 with possible probe and chop inside of the Monday profile. We've got that double distribution profile with the LVN being in around that 32 area. So at least chopping on the upper end of that. Hypo 3 is open auction out of range, failed to take out and put a new high in, come down into the prior day range and chop inside of here, maybe even come down and have more of a inside day. It's not going to be completely inside because we're going to most likely open out of range, but just basically move down and chop around this 47 area to 38 and a quarter area to start maturing this area of the auction and just give us a pause day rather than a gap and go day. Hypo 4 is an open auction out of range or an open test drive or an open drive, push up, make new highs, get a gap and go day, chop around in the 55, and then push up into the 60s and come up into the 69 and just basically get another day of a gap and go day. A fifth hypothesis is an open auction out of range, move down, strong move down, chop around here, and then get a pullback day all the way down into the 26 area. I think it's a lower probability because I don't think that today's going to be the day we're going to get a huge pullback, but basically, the fifth alternative is failure and a bigger retrace down into the mid-20s, low 20s, maybe even come down into the 19 and the upper teens, but that's a low probability. So those are my hypotheses. We're currently testing the upper Keltner, possibly put another zipper in, see how we handle the next two Renko candles. A move down to test the center line is going to bring us down into the 46. That's going to bring us back into the VPOC. I don't think we're going to have another gap and go day where we're not going to come back and test inside of yesterday's body. So do look for a move back inside of yesterday. It's just, do they find buyers in here, or do they have to continue lower? So I'll be looking for trades to get into the range and into value from yesterday, but I'll be watching very carefully for buyers stepping in and manage my trade that way. But I'm going to be trading to the short side, until I see some support, and then I'll reevaluate things, because it's very easily we could come in, find buyers, and then go up and continue to make new highs as our main hypothesis lays out. Gold is pulled back. I'm looking for the support to come in around 21.90. I did have a really nice gold trade last night. Again, I always talk about this setup being my favorite setup, and look what time it happened. So remember that Ducky's long on gold, or trade on gold for counter rotation, usually comes in around 2100. Here we get a beautiful FUBAR Mr. Sneaky Tech Gap. I got $5.30 out of this trade. I didn't hold it long enough, but if you did hold this, you could have easily got, without taking any heat on the trade. It took a little bit of heat. No, I didn't. No, I thought I took a little heat on the entry, but I thought they came back and tested me again. But you could have got all the way up into the 40s. So based on, even if you got a really bad entry at the high of the entry candle at 31 area, up into the 40s, that's a $1,000 trade on a one lot all day long. I wasn't very good at holding on, but that's trading for you. Anyway, that's going to complete the pre-market session. Let's just make sure that our overnight high is correct right now, right? 52 and a quarter, and our all-time high 52 and a quarter, and we're just chopping around there. So this might change. We still got 15 minutes, but we'll see. We'll make the adjustment as needed. If you need to make the adjustment after I close this down, go ahead and do so. But based on tonight's 5250 minus the 2750, we have to adjust our ATR down just up slightly to 25 now. So we're basically right at this range low. Okay, I'm going to go ahead and close this down. As always, trade well, trade safe, and we'll catch you on the flip side.